Welcome to Animal Spirits with Michael and Ben. Well, that was one of the crazier weeks we've had in a while. We had Dogecoin. How much was it up on the week? I don't know. A lot. You have the $100 million Deli. You have the Jake Paul fight, which did $65 million in sales, 1 point something million pay-per-view buys. I think I saw it was the 12th biggest fight of all time. How long did the fight last?
Not long.
You have Dapper Labs raising money at a $7.6 billion valuation. You have me getting my money out of Dapper Labs. Credit to me. Only took a 15% loss. Not bad.
Okay.
And
it's a $7.5 billion company, and I still can't get my money out. Can they invest in an ACH payment program now that they have this much money? They're worth this much money?
they have to listen. They're doing KYC checks, and obviously they don't know you. They don't know you like that, Ben.
I've been trying to get my money out of there since early February.
Have you ever thought that?
I'm
maybe they have some red flags on you. I'm just saying. Maybe there's some red flags.
Maybe your credit
score isn't as good as you say it is.
Maybe my top shot score. I'm not mad about the money. It's not even the money. This is principle now. I just take care of your clients, whatever.
Wait, hold on. We're not even done yet. And then finally, the big kahuna, you've got Coinbase. I was about to say raising money. They didn't raise money. They did the direct listing, which valued them at $85 billion or so dollars.
Yes, because you don't want to say they IPO'd, because if you're an actually person, you say, no, they direct listed. They didn't IPO.
Right.
I'm going to call it Dogecoin, because that's, I think, what it is instead of Dogecoin.
I'm still Doge. I'm a soft G, Dogecoin.
Okay, this is obviously insanity, but I'm going to say a couple nice things about it before I say some really mean stuff about it.
Okay.
The nice thing, it's happening outside of like a productive asset. This is not a stock or a corporation that is pumping up an asset, and then that stock is allowed to sell stock to unwitting investors that then hold the bag. And it's not like,
if this is the nice thing, what are you going to say that's me? This isn't very nice.
No, I'm just saying. So it's not like this is allowing speculation in an asset that's not like giving some company like cheaper cost of capital to raise debt or something. So it's speculation in like a speculative asset. So that's a good thing. Number two, blockchain is obviously very hard to hack because, listen, I would never wish ill will on anyone or hope that they lose money.
Do I have to remind you of your tweet from an hour ago? You said, I hope somebody hacks your account.
No, listen. That's you. I know. I said, yeah, well, that's true. I hope someone hacks your account. That's you. Right. But obviously, blockchain is hard to hack because if you can't hack the Dogecoin thing, like, what can you hack? Like, how has this thing not been hacked? Like, I'm sorry, but I wouldn't feel bad at all if people lost all their money in this. Like, I wouldn't feel good about it, but I wouldn't feel bad. Like, if someone hacked this and they stole it all, I don't think you. But like, if you were a hacker, wouldn't you say like, yeah, let's hack the joke thing? No regulators are going to care about that. So that's the nice thing. Not the bad thing. This is so stupid. Okay.
This might be the first time you've cursed on this podcast. I'm
using it for effect. Like, all the billionaires and entertainers and investors pumping this thing are all acting like charlatans.
Agreed.
Coinbase was a seminal moment for crypto last week. Like, Coinbase brought crypto into the mainstream. And then we have this. Right. This is now a $50 billion thing. It's the fifth biggest crypto that there is. Like, this gives crypto a black eye, I think, because it shows that you can obviously manipulate prices, because there's obviously a whale or whales who are pushing this thing around. Like, someone owns a few $1 billion in this thing, and they're pushing the price around. I'm sure that's going to come out.
I could hear the email now, Ben. You don't care about the Fed manipulating stock markets, but you care about people manipulating Dogecoin.
I know. It's, yes, exactly. It's because that's exactly the same thing. I just think the last couple of years have completely broken the brains of young investors who have come into this stuff and think that degenerate gambling is the way to invest in the markets. And so I just think, I mean, this guy literally created this as a joke. He spent 3 hours typing in some code, and now it's huge. And I get like, oh, it's good memes and that's funny, but it's just, this is so dumb, right?
Can I tell you?
It's just so dumb.
I'm not bothered by it, not in the slightest.
No, I'm not really. Like, if people want to speculate and have fun with it,
you can't go on a rant and then say you're not bothered by it. Just own it.
I'm not bothered.
Obviously, you're annoyed.
I just think it's just. I think it gives crypto a bad look, because it was like so many good things are happening in that space. I think this is the opposite of that, and so that's anyway. You're not bothered by it. I don't buy that. Come on.
I'm telling you, I'm not bothered by it. This is a fantastic quote from the creator of Dogecoin. He said, This is in a Bloomberg article. He said, how and why, I'm sorry, this is not his quote. This is from Bloomberg. How and why the cryptocurrency has run so far, so fast is a mystery even to Marcus. Marcus is the guy that created Dogecoin. The frenzy, the tweets of support from the world's richest person, none of it makes sense to Dogecoin's creator. Here's his quote. Maybe it's that Dogecoin can be a good barometer for how far from reality things can get.
I think there's an element too here of you had an entire generation of people who grew up online.
Mm-hmm.
And I don't think that the internet has made us different people, but I think that the internet just amplifies all these things. And everything is gamified and nothing feels real when everything is pushed. Like if all your financial information is stored on your phone or on a computer in the cloud somewhere, it doesn't feel real when you're doing stuff. And so it's easy to allow memes and jokes to like take over, and it blurs the lines between because it doesn't feel like real money to anyone when you're doing this stuff.
Can I tell you the coup de grace of this whole thing?
What's that?
Billy Marcus, the creator of Dogecoin, he said, I'm pretty risk averse. I just put everything in the S&P 500 index fund.
But that's my worry, is that like it's great for these entertainers and people who have a lot of money. Like Mark Cuban is pushing this so people can like buy Mavericks tickets with or something. He's going to be fine.
That part of it bothers me. I'll say that part. I don't understand what Cuban's doing. It's weird.
Yes, he tweeted out last week that like supply and demand win again.
I don't know what that means.
I'm sorry, but Mark Cuban is like a great businessman who's also a charlatan, right? This year has proven him to be somewhat of a charlatan. 10% of a charlatan.
Okay, that's fair. I don't want to. I mean, I don't view him that way. How about this? We had this conversation a long time ago. Like how things on the internet, it's either black or white. Like if somebody does something you don't like, it's like, oh, F that guy forever. I'm a fan of Cuban, but I don't like what he's doing now. So I don't want to call him a charlatan. But
that's
this
what I'm saying.
But
he's pushing people into GameStop. He's a gaslighter.
Yeah, I don't know. Yeah, this part is confusing.
Like I get it that like him and like Guy Fieri and Snoop Dogg can like make jokes about this stuff, but like there's going to be young people whose brains are completely broken as an investor from this going forward, and are not going to understand how to invest in a wise and reasonable way.
How is this different than any other speculative time? I know this seems dumber, but how is it dumber?
It's way dumber. This is a joke. It was literally a joke. I think this is not even like the 90s at all. So our colleague Nick did one today and said this is the craziest market he's ever seen of dollars and data, and this is like the 90s. I don't think this to me reminds me of the 90s, because this is like everyone's trying to be like wink wink, cool, I'm in on the joke, it's ironic, it's fun, it's a meme. This is something completely different. This is all internet based and online, and I don't know.
Well, because in the 90s, Nick made the point that these companies could conceivably grow into the multiples. Like obviously they didn't, but there was some sort of small universe where it could have happened. And I guess they did. It was early, right? They were early. The Qualcomm it was ridiculously valued for the time. But how is Dogecoin going to grow into 50 billion? It doesn't make any sense. So I'm with you.
You tweeted out last week that like it doesn't even have the scarcity thing of Bitcoin. Like you can mine this stuff all day and it's not. So
I'm actually confused about that, because this guy, Billy, the Dogecoin guy, tweeted to me that actually it is finite, but then the article, I'm not sure what, I don't know what's what. But anyhow.
The thing is, the reason that this kind of annoys me is because I think it's going to get worse. I think this stuff is going to get even dumber going forward.
I'm much more annoyed by the GameStop and the AMC stuff and the Hertz of the world, because the stock market, it worries me when the stock market is a casino. At least if you're doing a Dogecoin, all right, fine, it's Dogecoin. Everybody knows it's a joke.
Okay, but how's this? Do you think that a company like Robinhood should even allow it to be traded on their platform? How about that?
Cares? Of course they should.
Why? But I mean,
what do you mean?
Why couldn't they take a stand and say like, you know what, we're not going to allow this to be even traded on? Like, don't you think they're making it worse?
Take a stand for what? They're trying to make money. I don't even know what you're talking about.
I don't know. I mean, will they allow people to play roulette on their
yes, if
slot machines?
Money,
and
yes.
That's what I'm saying. Like, but I'm saying at a certain point you have to have some morals. I would appreciate if they have some morals.
Dogecoin actually took down Robinhood. Like I think there was such demand. So you could say like, oh, it's just a few kids playing, but it's really not, because obviously it's enough to take down Robinhood, which is a pretty big website.
I know, like so much of this stuff that's happened in the last year to me has been kind of like fun and games, but this one for some reason irks me, and I don't like how many established people are again pushing other people to get in on this.
Yeah, that part
people
annoys
are going to
me.
get hurt. That
part annoys me.
I don't like it.
I just don't know that I buy the fact. I do buy it with trading stocks, but I don't know that you're going to have people in 15 years who's like, man, Dogecoin set me down the wrong path.
But I don't want people complaining about the fact that the system is rigged against them and they can't save, and then they're putting money into stupid shit like this. That's all. That's my problem I have, is I don't want people to complain about the system being against them and I'm fighting back, and then I'm going to invest in Dogecoin because that's gonna fix things.
Fair enough. There was some misreporting of what happened with Coinbase's direct listing. So the CEO sold $291 million of his shares, and people are outraged. It's 1.5% of the shares that he owns. And guess what? That's what a direct listing is. Here's a good quote from Noel Akeson from CoinDesk. A direct listing is a liquidity event. An IPO is a capital raising event. Selling by insiders, it's sort of the whole point.
They had to sell, right? You had to buy it from. There had to be supply from someone.
Where do the shares come from? They're not raising. The company's not raising money. It's a liquidity event. So where did the money come from? This is interesting. 2/3 of the $5 billion of shares sold were from Fred Wilson and Union Square Partners, Andreessen Horowitz. So again, 2/3 of the $5 billion in supply was from Fred Wilson and Union Square Partners. Andreessen and Horowitz sold $500 million worth. So the shares sold from the company. I thought somebody said that the CFO cashed out of all their shares. It was a pretty small part of the story.
I don't know what it is now, but last week it was a $60 billion company. So there's only $5 billion so there's still a ton that are held by insiders and people at the company.
Mm-hmm.
Yeah. So of course you're right. This had to come from somewhere. It's just something for people to get mad about, I guess. And even if the founder Brian Armstrong didn't sell any of his shares, I mean, he could have borrowed again. Like, it doesn't really matter. Like, this guy has got money growing out of every orifice in his body. Like, he's going to be fine, right? He could have borrowed against the share or something. He could have done something else to get a liquidity event. He probably just did this. Whatever.
Speaking of liquidity, there was a quick flash crash in crypto on Saturday night. I was sleeping, but Weisenthal tweeted, and there's some, I don't know if there's misreporting or misinformation being spread, or no, I guess nobody really knows what happened. But Weisenthal said, he tweeted from the block, incredible sign of how big crypto trading has become over the last year. The dollar volume of leveraged long traders who got liquidated in last night's flash crash was more than twice as big as the crypto crash of March 2020. So they're reporting that $7.6 billion in crypto long positions were liquidated.
That's pretty wild that can happen over a weekend.
$7.6 billion.
This stuff.
We don't need 24/7 stock trading in the stock market.
No. So there's this article in the Wall Street Journal. It's worth a read. So he was also, it's called "This Vegan Billionaire Disrupted Crypto Market, Stocks Maybe Next." So Sam Bankman-Fried, he was actually on the Odd Lots podcast with Joe Weisenthal and Tracy.
That was great.
Tracy Alloway. It was really good. This guy basically figured out how to arbitrage between different crypto exchanges, and he had to set up his exchange in Hong Kong just to access some of these markets. It's a really interesting story. But his exchange called FTX, they're going to try to do 24-hour trading where they tokenize these stocks like Tesla.
By the way, somebody emailed us to buy Solana because Zach Prince was talking about Solana.
Oh yeah,
on this exchange. I can't buy it. Well, you can't buy it in the United States.
Right. So a lot of the stuff is only it's overseas. So kind of like you cannot take part in BlockFi, just like that, right?
Right.
Yeah. I mean, I'm guessing if these stocks were allowed to trade 24/7, there would be, if you think crypto's crazy, like there'd be a lot of manipulation and pushing around, and it's unnecessary. But I'm thinking, getting back to our Dogecoin stuff, it's going to happen, right? Like people are going to want that. So I think at this point, there's probably someone's going to do it. If it's not this place, it's someone else. Don't you think they're going to figure out some way, unless the regulators step in to shut it down?
I mean, it's so easy to think this is the top. It could get so much dumber. I don't know how, but it can.
That's the thing. I don't even really think this is the top. I think it's going to get way, way dumber than this.
Do you think people are thinking that there's going to just be like a full sale wipeout of everything? Yes, there's going to be, listen, 99% of this stuff is garbage. I tweeted the chart of top cryptos at CoinDesk. There's, I think there might be hundreds or thousands.
Yes, but there's a scarcity among all those hundreds and thousands.
That's true. I have more to say on that. We'll hold off on that for later in the show. But Bill Miller, in his Q1 letter, wrote this.
Hey, can I just say something real quick before we get into this? I never know he had this letter that he put out. It says Bill Miller 1Q. I've never seen the 1 before the Q before. Usually it's Q1. He said 1Q.
He's a contrarian.
Okay. There you go.
Some stock market models are flashing yellow, indicating caution at these levels. I am reminded of the aphorism attributed to the eminent statistician George Box, who said, all models are wrong, but some are useful. The models that show the market is overvalued are not wrong with respect to their parameters, but they are not useful in my opinion, because their parameters do not capture the complexity of what drives markets. Market or economic forecasts are forecasts not of variables ordered in particular ways, but forecasts of behavior. All right, whatever. So Mobison did a piece last week where he showed the percentage of companies in the Russell 3000 with negative net income from 1980 to today. And it's basically gone up over time with some dips here and there, but it's at an all-time high.
So this was below 5% in 1980. Now it's approaching 40%. It's a big move.
So you look at this chart, and if you have any hair in your head, you rip it out and you say, this is a house of cards. This doesn't make any sense. This is going to end badly. Fed manipulation, blah, 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 blah. Actually, what's going on is the rise of intangible investments. Why? Because from an accounting point of view, these show up on the income statement and not the balance sheet. And what that means is that these are not investments. They're not R&D. They are expense. They're viewed as expenses. So when you look at a chart of the intangible investments that companies are making, it's massive. $1.8 trillion in 2020. So if you wonder why all of these companies are reporting negative net income, well, here's a pretty good place to start.
So if you're someone who's beating your head against the wall for the last 7 years and saying Tobin's Q shows this, and what about market cap to GDP, things have changed, and maybe the market is not as dumb as you think. And I also think, like, you can be like us and say so much of this stuff that's going on right now is just doesn't make any sense. People are throwing caution to the wind and acting crazy, but that doesn't always mean it's a bubble. And I think there are some people in 2008 who completely, this is what I'm worried about with the Dogecoin stuff. People in 2008 had their brains broken, and they think everything that has like a 15% price rise is automatically a bubble. So we've been talking about the housing market for the last few weeks, and especially in places like Twitter and YouTube, the comments we get are always like, just wait, you morons, this is going to happen. If it keeps going up, then it'll just crash even further. And these people, it doesn't matter what you tell them. They think everything is a bubble, and they have thought that every year since 2009. And they're not going to change their minds about it. So I think it's okay to think things are getting kind of crazy without also saying this is going to be a bubble that's going to end humanity, because that takes away the reality of the fact that markets are just so much different now than they were in the past, and they're more professionalized, and that money has to go somewhere. That's my simplest reason for saying this is not a bubble that's going to end humanity. Is that okay right? I don't know. I'm arguing against myself in this podcast, I guess. But I just think the people who see bubbles everywhere all the time are just never going to get out of that mindset. All right, here's the thing, what I was talking about, like, for Robinhood and the Dogecoin thing. Like, can't they just, for once, like, look out for the best interests? So this was in the Wall Street Journal.
Hang on, Ben. Hold on. Let's just pull on that thread. If they disabled trading on Dogecoin, don't you think their users would be so angry that they force them to miss out on this 4,000% gain over the last month or whatever it is?
If it was harder to buy, we probably wouldn't have had this 4,000 point gain.
But who's it hurting? What's the problem? Why would they limit Dogecoin? They're not going to get into that business of picking and selling, picking and choosing.
Can you buy Dogecoin at Charles Schwab or Vanguard? They decided not to.
That's not Robinhood.
Hear me out. All right, this is from the
Wall Street Journal. I can't believe I'm defending Robinhood against you.
New investors discover tax pitfalls of Robinhood and other trading apps. So this story basically shows that when you buy on Robinhood, they're all taxable accounts. You can't choose which lots of your stock to sell if you bought them at different prices. So you can take gains or losses and basically have a tax-aware strategy. The most vexing for investors like Mr. Long, who they profile here, is that despite the new platform's sophisticated technology, they don't make it easy to deploy tax-wise technique known as specific lot identification. Investors use it to lower their taxes, sometimes significantly, by choosing which shares to sell if they have lots bought at different prices and aren't selling all of them. So part of your stock that you bought could have a gain, while the other part could have a loss, and you could use that loss to offset some of the gains as far as taxes go. Robinhood doesn't allow you to do that. Why don't they allow you to do this? I don't understand. And maybe it's too hard for them.
Here's why. They aren't allocating resources to this project. I think it's that simple. They're focused on growing, and that's where they're dedicating their resources.
But would it be that hard to every once in a while throw their customers a bone? Like, I know they just got rid of confetti on their app. Again, I'm still a user of Robinhood. I think it's a great user experience, but I think stuff like this just, why?
I think you're holding them to way too high of a standard. They're not like Amazon or Costco that has like a relentless
I think your standards
focus.
Are too low. Seriously? You're defending them for this? Come on.
What do you expect from them?
Sorry.
Why are you giving them?
Maybe I'm a little salty today because I had my hangover from the second shot I got yesterday.
Why are you giving them the benefit of the doubt? If anything, their business, they're trying to grow and they're doing it spectacularly well.
I know. I just think about if like every once in a while, like they just didn't treat their customers like crap, how much better things would be, and they could still grow. I don't know. Am I too salty today? Is that the problem?
You are wearing denim.
I have my Jay Leno on today. Remember when he would go on the street to ask people questions and he'd go denim on denim, the Canadian tuxedo? Yeah, so I don't have jeans on though. All right, so you don't think this is a big deal? All right.
I mean, listen, I understand where you're coming from, but listen, I don't know. There's only so many hours in the day for them to put their resources to something. They can't whack every mole, and they're growing. They're in growth mode.
Yeah, so let's give everyone Dogecoin and don't worry about taxes. That'll sort itself out later.